I'm Charlotte McLeod with investingnews.com, and here today with me is Ryan McIntyre, managing partner at Sprott. Thank you so much for joining me. Great to have you here.
Yeah, thanks. Good morning.
Really good to be speaking with you. I think definitely we're at an exciting time for gold right now, and I'm hoping that you can help sort out for our audience what's going on with the price. We really saw gold break out over the last few weeks, and I think that people are looking at what happened and wondering what the driver was there, especially because we've got so many underlying points that have been providing support for quite a long time. So I'm going to start with that kind of broad and big question there on what you think the trigger was for this price increase that we've seen for gold.
Yeah, no, I think a lot of people have been wondering, why the gold price has suddenly become in favor. And so you've seen a pretty big move over the past month and a half or so. And it really kicked off on the first Friday of March, which is when they released the ISM manufacturing survey for the United States, basically showing a deceleration in manufacturing activity, so further contraction in that. And, as everyone does these days, they're very attentive to what the Fed might do in response to any economic data. And so people were really anticipating, I guess, based on that report, Fed cuts probably starting in June. And I think to me, that's what probably kicked off at least some part of this gold rally. But again, and I don't think it's the only explanation, but it's the one noticeable one where you can see literally within, a minute of the release of that report, gold price kicked up and frankly hasn't looked back since.
Okay, I think it's interesting to touch on the Fed because, okay, so if that was the starting point there, that makes a lot of sense. And people are always watching closely what's going on with the Fed. And just this week, we got the latest US CPI data, and it showed inflation coming in hotter than expected. And I think that prompted people to start asking questions about what's next from the Fed. We were anticipating maybe those cuts begin in the summer. Maybe now they'll be pushed out further. So I'm wondering, what are you thinking we could see from the Fed moving forward this year? When do you think those cuts may start?
Yeah, no, it's a great question. And I think, it is only one element of the gold story, in my opinion. And, I guess from a rate cut perspective, obviously with inflation coming in hotter than I think most people were expecting, it is becoming a little less likely that they're going to have 3 cuts this year, probably going to go down to 2 or less. So we'll see how that goes. But there's some other components as well that people should be looking at just in terms of gold. And I think this is probably why, people aren't universally convinced of one particular reason why gold prices appreciated. To me, one of the other big stories has been over the past couple of years is gold buying by the central banks around the world, most notably China being probably the most dominant of the lot. And to me, I think one of the interesting dynamics about gold is that it's completely independent from the financial system. And, when Russia invaded Ukraine and then had its assets frozen from a foreign exchange reserve perspective related to US dollars, I think that sent a pretty big shockwave, around the world in terms of how people hold their foreign exchange reserves. And so now I think people, central banks specifically, are recalibrating the mix of what they hold. And I think they're doing that at the central bank level. But I also think they're doing that on the trade level as well, which to me is probably the more interesting and dynamic part of the whole gold narrative, and probably will continue as long as we go down this path of deglobalization and geopolitical tension.
Yeah. Do you think you can go into what you mean there by the trade narrative among the central banks? Because I think people are quite familiar with the strong central bank buying we've seen. Maybe they don't know about that element.
Yeah, I think, if you look at, specifically countries like China, Russia, like the BRICS type countries, they've long wanted another currency or another alternative except for the US dollar. They've talked about it very openly. And, I think with the conflicts that have emerged, whether it's between Russia and the West / Ukraine or China and the United States specifically, I think people are really starting to shift around, how they actually transact in various goods. So you can see, maybe, China may be purchasing oil with gold or that type of thing. And so I can definitely see gold being used a lot more on a transactional basis. And I guess, from my perspective, when I'm looking at things, that basically just means more demand for gold. As U.S. has a dominant place in the world as the reserve currency, by that fact alone, it actually tends to generate quite a bit of demand for the U.S. dollar, which is hugely beneficial to the United States. Typically get lower interest rates and so forth from the United States perspective. And in gold, it's the exact same way. I mean, just the sense that obviously you get more demand for its use. You'll obviously get probably a higher price as more people want it. And I think more and more you'll have people wanting to transact in more neutral, whether it's currencies or gold or some sort of other item that really can't be influenced by another government.
Yes. Okay. Definitely makes a lot of sense. And I want to talk about Sprott's recent report that went out on what's going on in gold. I think it highlights that strong central bank buying and kind of in contrast mentions what's going on with CFTC and ETF gold holdings, which are lower. So I wondered if you could talk about what you see going on there and how that's playing into what's going on with gold right now.
Yeah, probably one of the most unusual parts of this gold rally over the past month and a half is that you've actually continued to see a decline in gold holdings by global ETFs. And so if you look, I think over this year, you've seen roughly a 4% decline in gold holdings in ETFs. But it's actually down by about 25% if you go back from its peak a few years ago, which is very interesting because historically, when gold prices rally, you've often seen that come through and express through the ETFs that hold physical gold, which makes sense. And so this rally is much more interesting because the rally has happened despite the fact you've had actual outflows of gold holdings via the ETFs. So to me, I think there's probably a whole nother leg that's missing of potential gold demand, whether you're talking about retail investors or maybe some institutional investors who would typically play things through an ETF that holds physical gold versus buying the bars themselves. So to me, I think it's a very unique circumstance and one that I think we're probably going to see reverse and probably add to what are already pretty good gains on the gold price.
That is very interesting. So it's not that it's not necessarily coming, that retail and institutional demand there. It's that it hasn't got there yet. What do you think is the reason that it's lagging a little bit?
Yeah, I think there's probably a few different things. I think certainly in the United States where I'm based, the S&P 500 has done extremely well. And I think people don't feel compelled to take any other positions at the minute. That's done very well, so they're kind of sticking with it. They sort of have that risk on mentality to a degree. However, we are starting to see kind of the early signs, I would say, of people seeking things that are uncorrelated to the S&P 500, and gold probably being one of the most notable and logical moves that you can make in that department to get into something that's completely uncorrelated and frankly, that's divorced from the financial system. And we could talk a little bit about, the sovereign risk and so forth, which to me is going to be increasing certainly over the next decade.
Yeah, definitely. I was going to ask you, we've gone over a number of gold price drivers, but if there's anything else on your radar that we haven't covered, let me know.
Yeah, I'd probably say one of the things that at least sort of in the midterm, I would say, would just be focused on increased risk on the sovereign level. I think a lot of people, if you look back over the past few crises we've had, whether it's COVID, whether it was, the financial crisis of 08, 09, even the dot-com, you've had a significant bailout basically coming from federal governments around the world. And the interesting thing about that is when that all started more than 2 decades ago, starting with the dot-com bubble, you've had a significant increase in debt levels taken on by federal governments. And, the United States in particular, to me, is at a point where, you've got a deficit of about 6% of GDP a year. You've got, debt to GDP at about 100%. And, if you rewind back 20 years ago, it was probably like, quarter of that or something, maybe a little more than that, but significantly different than what it is today. And so the ability, I think, for sovereign governments to actually take care of these problems that we often have is going to be probably a little bit more diminished. And to me, one of the sort of canaries in the coal mine was Britain, where you had Liz Truss's government proposing basically some tax cuts, effectively increasing the deficit to propel things in their economy. And you looked at the currency went into a tailspin immediately, yield spiked immediately. And to me, that is such a small thing that they did, but it was what tipped them over the edge. And I guess my point is, you definitely don't want to be anywhere close to the edge with something so grand on the sovereign level. So I think people should start taking note, and I think people are already talking about it a little bit. But to me, I think you probably want to start getting a little bit at least of some protection like gold sooner rather than later.
Very good point. Thank you for going into that. I think if we put all this together and look at what you've been saying, it sounds like for you, although the gold price it's historically high at the moment, it looks like there still could be room for it to move higher. And I think many people are looking at it and they're excited to see gold this high, but they do wonder if it's sustainable. So I wondered if we could talk a little bit about gold's price potential moving forward this year and what we might see there from your perspective.
Yeah. So I guess it's all relative, right? I mean, every investment should be measured against the opportunity cost of others, of not holding others. And so I guess when I look at things, I think people are so heavily weighted, particularly in the United States, in S&P 500 stocks, where trading at all-time record values. So if you look at, the Shiller price earnings ratio multiple, it's trading at about 31 times normalized earnings. And an historic average is actually half of that. And so you're way above, to me, the norm. And that's also not including the fact that we're also basically at peak profit margins as well. So that number actually probably understates the value differential between that and, I would say, average valuations. And then so I look at gold, and if you truly believe that the countries are going to continue to be reckless, whether it's fiscally or even on the geopolitical side, to me it is much better to have something that is not overpriced and that can be used in transactions all over the world that no one can touch when you get to these types of levels of risk, I would say, whether it's financial markets risk or geopolitical risk. And so to me, gold is probably one of the few elements that actually exhibits those.
Okay, and I'm hoping we can touch a little bit on the gold stocks as well, because I think that people are looking at gold stocks, they're seeing the gold price very high, and I believe gold stocks have moved to an extent, but maybe not to the extent that people would like to see them move. So what are you seeing there when you look at the gold stocks? What do you see moving forward for them this year?
Yeah, gold stocks are interesting because they've lagged the gold price, which is actually pretty unusual. So year to date, gold price is up about 14%, and the gold stocks are up about 9%. And typically, if you look at just the margin expansion that they have based on increased gold price, you typically expect sort of a 2-to-1 ratio. So if gold price were to go up 1%, we'd expect profits for the underlying gold companies to go up about 2%. And therefore, the share prices go up about 2%. And the unusual part, I guess, is we haven't seen that. And it's actually only been very recently, probably in the last 2.5 weeks, that you actually see gold equities become positive, even though the gold price has been positive for quite a while this year. And so they're just starting to catch up, but there's still a fair bit of room there, in my mind, to catch up. And I think, to me, I look at the gold space being kind of a very tactical opportunity that you can take advantage of. Because like any cyclical business, you get some times where valuations are really high, you've got a lot of people interested. And then conversely, like today, you've got valuations that are very low, you have disinterested investment population. And so to me, now's a great time to be, in the gold equities in particular, and take advantage of both the gold price and actually the low sentiment in the gold mining space itself. And so to me, it's probably a great spot to be on the investment side.
And is the lag that we're seeing there, is that again related to maybe people are more interested in the tech sector? They don't want to be in gold and precious metals right now. What are you seeing as the reason for that?
Yeah, I think that's probably a good answer to the question. I think, if you look back historically at gold mining companies, usually It's been a lot more speculative, I would say, in terms of what people are doing with gold equities. And some of that maybe has been taken out a little bit by Bitcoin or so forth. But I think now that people are kind of coming back to gold to just early stages, I would say, from the physical sense, to me, the next logical step is them moving into the equity side. And they'll typically start off with, I'd say, the larger, more diversified players in the gold space. And think of, the big ones like Agnico Eagle, Barrick, Newmont, the bigger players, and also probably the royalty companies as well, given those are well diversified and probably the safer way, I guess, if you're just going to dip your toe into the gold equity side of things.
Okay. Yes. So certainly it just seems like we're in a little bit of a waiting game right now, but things will start to move at some point. Thank you for going into that as well. So gold, great to go over what's happening in gold. We should also, though, make sure to touch on silver. So silver, I think we do expect to lag behind gold, which of course it's been doing, but it has been on the move. And this week I saw it over $28, which made me really do a double take on the screen when I saw that number. So silver, I'm wondering if you can shed some light on what's going on with silver. Is it following gold up right now, or are there things going on its industrial side that are also at play?
Well, after long lagging gold, it's finally getting some love. Not a lot, but a little bit finally, just a bit. But to me, it absolutely should. It's partly viewed in some circles as a monetary metal, partly in some other circles as an industrial metal. And it's got a lot of good things going for it. So I guess just on the industrial side, for one, you've got solar panels being a dominant part of the growth story and demand for silver. And to me, that is absolutely going to continue as we electrify the world with clean energy. And so to me, that is an absolute natural. And on the monetary side, what's interesting to me is that it's probably the more affordable way for, I would say, retail investors to actually take advantage of, I would say, monetary debasement that people usually focus on with gold, being obviously a fraction of the cost on a per ounce basis. And so typically, you get actually some magnification in the returns when you invest in silver. It tends to be a little more volatile than gold. And so, to me, we expect gold to continue to move up, and we'd expect silver to follow and maybe even exceed gold price appreciation, given the lag and also the tend for the commodity to actually overshoot gold, both on the upside and on the downside in terms of price performance.
Yes. So looking at the silver price, what would you say is the main level we should be looking for right now? I think in my head I have 30 as a big number that we should look out for, but I don't know if that's exactly correct. So what are you thinking?
Yeah, I would definitely have $30 in mind for sure. I don't think that's a stretch at all. And again, I continue to think over time it will continue to increase, just like we're forecasting for gold. So good long-term future ahead of that for sure.
Yeah, and on the note of silver, I think one of my favorite questions to ask when it comes to silver is we have this big deficit. We've had deficits for I think the last several years, these very large deficits. And it's so interesting to me that that is happening, but the price is not, well, it's moving a little bit right now, but in general, kind of staying in that range bound area. So any thoughts on that and why there is that situation?
Yeah, for the last several years, we've had huge deficits on the silver side. And really, they've been supplied by the inventories that are kept above ground. But what's interesting about that is no one knows exactly the full quantity of inventories that exist. There are some estimates out there, but you can imagine they're dwindling and quite rapidly. And what I've observed over time with any commodity is that you can have these deficits for a little while, and then literally one day people wake up for one reason or another, and all of a sudden you get the move, and the price starts running away pretty quickly on you. And so to me, you always want to be positioned, even though you can't explain kind of when exactly might happen. You really want to be positioned kind of ahead of that. And to me, that's kind of the perfect setup for silver now. So to me, I would use it as an opportunity and less of a frustrating aspect of it, just understanding the dynamics of it. And so, having seen all kinds of different commodities go through it, to me, patience is one of the things that is absolutely required and frankly, usually well rewarded as well.
Very, very good reminder not to get frustrated when you're presented with what could be an opportunity. Okay, I think we've gone through quite a bit on gold and silver, but Before we wrap up, I'll put it back to you, ask if you have any final points that you would leave investors with.
Yeah, I would just say, just from a gold perspective, I mean, at Sprott here, we recommend people have 10% of their wealth in physical gold. And from a gold equity side, we usually recommend anywhere from 0 to 5% in people's portfolio. And again, just on a tactical basis, 0% when things are overvalued, frothy, prices have gone up a lot. And then 5% when things are kind of down and out, low valuations, and no one cares about the space, just like any other cyclical space. So to me, we're definitely in that 5 category where no one cares, but you can feel people are starting to care. And to me, it's one of those things that you can take advantage of, the gold price and the optionality that gold equities have.
Okay, I think that's a great place to wrap it up for today. Thank you so much for coming on to go over what's going on in gold and silver. This was really good.
Thank you.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Ryan McIntyre of Sprott. Thank you for watching. If you like this video, make sure you subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below. We'll see you next time.